Hi, I'm Jeremy Hallett, and this is Insurance Insider. Today, we are going to focus on one of my favorite life insurance products that has so many cool use cases and wonderful features, and we're going to go through them in the video. But unfortunately, it's a relatively unknown product in the financial advisory space. So, you're about to learn. The product is called Failure to Survive. It's okay to insert a Google here. Most agents I speak with about the product make some comment about the name. Failure to survive isn't. I've heard from many people that's a strange name for a life insurance product, but so be it. It's called Failure to Survive. It's a Lloyd's of London product, and sometimes there's this bias about Lloyd's only being there for the super wealthy, to cover somebody's chest hair or their fingernails, right? But this is not true. Lloyd's does some really cool stuff in the industry of life insurance. And Lloyd's can be for everyone, not just the ultra wealthy, or at least for every business owner when it comes to failure to survive. So why failure to survive, or let's call it FTS from now on, okay? If you are currently offering life insurance, this product needs to be in your quiver. You don't need to be an expert. You just need to know a couple things. That it exists, that it's for business needs, that the policy can be placed in a day or two. It can be a small or a large face amount. 20 million, 50 million is fine. 100,000 is fine. It's super easy to do, and your client's health or lifestyle is not going to preclude them from getting coverage. So let's talk about where we see FTS being used. So let's say we have a business owner who is healthy and needs a policy for a bank loan by Friday. We go ahead, take the one-page app. There's no exam or medical records, and within a day or two, we have the deck pages to give to the loan officer. Then we go ahead and do traditional underwriting to get the client coverage in the next 60 to 90 days. We drop that Lloyd's policy once the traditional coverage is in place. And by the way, there's no commission clawbacks with that Lloyd's product that you put in place. Now, the same thing can be done with an unhealthy business owner looking for a loan, or buy-sell or key person coverage. Those all work as well. Business need is required, right? So we have seen clients who are currently going through cancer treatment or alcohol or drug treatment. They got a decline because of liver enzymes, had a heart attack last Christmas time, etc. Pick your decline or reason for postponement, and your client can still get coverage that'll just have an exclusion for the reason for that postponement or that declination. And this is a wonderful product for client retention. It's that temporary option to get them covered and keeps you and the client on each other's radar to go out for the traditional coverage when the time comes, which might be immediately, might be 6 months from now, it might be 3 years before we can get traditional coverage, but we have something in place during that time frame. And the fast underwriting period allows policy owners to meet those strict and time-sensitive deadlines mandated by lending institutions on loan agreements. So an FTS policy is useful when traditional universal or term or whole life insurance underwriting is holding up a business deal hinged upon the indemnification of a corporate buy-sell agreement. So from a business loan perspective, this protection is designed to indemnify a lender for the balance of money at risk given a contractual business loan agreement. In other words, this is designed to protect a business against the loss of those lives critical to a business venture and safeguard the firm from financial disaster. The premature death or disablement of the borrower will trigger an immediate call on the loan. The protection of other business assets becomes more essential during a situation like this, and often there is a desperate need for urgency when dealing with a loan approval and the funding of a loan. Something to note is that the term of the insurance is from 90 days to 12 months. Renewals are considered if extended coverage is needed. Copy of the loan agreement is required, and the benefit amount will not exceed the balance of the loan. Again, this product is absolutely awesome. Clients really respond to the message, and so do their advisors. It is so easy to write one of these, and once you've seen it in action helping out a business owner, you will become a believer. So that's the update from Insurance Insider today, and looking forward to seeing you again next time.